Markets remain at critical levels, so today's FOMC promises to be a pivotal moment for all of these markets, and that's why I have a massive update for you. We are talking forex, so I've got the dollar, the euro, the pound. We're talking commodities with gold, silver, and WTI today, and then also indices like the Nasdaq and the S&P 500, and then finishing up with crypto, Bitcoin, and Ethereum. So it's a massive update, but this is really important for your trading because, again, today's FOMC promises to be a pivotal point for these markets because they are at some critical levels. All right, so my name is Justin Bennett, full-time trader and founder of Daily Price Action. As always, all of this is my opinion only and not financial advice. So let's dive right into it, guys. This is a huge update. This is the biggest update I've ever given. And for that reason, I'm going to ask one favor of you before we start. Smash the like button, guys, and leave your comment if this helps as we go through it. It really does mean a lot to me. These videos take hours to make, and it takes literally 20 or 30 seconds to do those two things. So starting here with the DXY, this is the area that we have talked about now for the past few days. So over the weekend in the SMC Outlook video, what we talked about there was this displacement up. We had a single print down here at 99.47. That is a thinly traded level. Okay, in other words, it's an inefficiency in the market. You often get markets pulling back, okay, toward inefficiencies like that to facilitate an efficient auction. And that's exactly what we saw here from the DXY so far this week. Now, very sideways, okay, since testing this support level down here. And that's to be expected because we do, again, have FOMC today. So market participants right now are hesitant to make any big decisions going into FOMC. And again, that's to be expected. We see that all the time. So right now, this area down here, okay, is going to be support for the DXY. So right around 99.5. Now, two scenarios. Okay, obviously we have the DXY holding onto this area and rallying after today's FOMC, in which case we have these highs back here. So right around 100.2. And then we also have these highs from back here in March up there around 100.5. Okay, so we've got these highs back here and these highs as well. Now, longer term, I remain bullish on the US dollar. And that's a largely unpopular opinion just because of the downtrend that we had in 2025. And the fact that this market has been very sideways so far in 2026 and really the second half of 2025 as well. But from an SMC standpoint, when you look at this chart here, you have the BOS, the break of structure below. Okay, so this very convincing close below that made these the external high. We had the change of character back here. So we've talked about this a lot. And this is, in my opinion, pointing to a potential rounded bottom for the US dollar. Okay, so obviously I could be wrong there, but so far that is the structure that I'm working with. Okay, so that's the daily time frame. Now, shorter term, 4-hour time frame, obviously, again, this is going to be the support level. So we talked about the two resistance levels if we get the rally. This up here is also an inefficiency here for the DXY, this candle back here. So that could pull the market higher. And if we were to see the DXY break down, then like I mentioned in a recent video, if you look here on the daily time frame, you can see where basically below this low right here, we do have an inefficiency back here. So there is a scenario where the DXY does break down to come back here and tag this inefficiency first, okay? I'm not saying that's gonna happen because what matters is what happens down here at support following FOMC, okay? So, as always, guys, this is not about forecasting. It's not about predicting where the market is gonna go next. All it's about is looking at the chart. What is the chart telling you right now? Okay, and right now, the chart is telling us the market is still at support. Okay, so we have to respect that fact. Okay, so overall, like I said, longer term, I am still bullish to the US dollar. It does not mean, though, that we cannot get pullbacks, clearly, because we did have a pullback back here in April. Okay, so let's move along here to the euro because we have a ton of charts to talk about today. And before we start to, if you do want to see exactly how I trade SMC full time, whether it be the euro, commodities, indices, or even crypto, it works on all of them, then check out the link right here on the screen. That is going to be a free SMC training that shows you how I trade full time step by step. All right, so the euro, guys, I am still bearish on this market, right? Longer term. And again, going back to DXY, it's essentially the inverse of the DXY. You can see where back here in 2025, we had higher highs and higher lows. We have, for the most part, second half of 2025 and the first half of 2026, we have seen this market go sideways. However, this BOS up here made this the external low. You can see we got the close below it. Now, this close below was very convincing. Okay, this close below was over 50 pips back here in March. So in my opinion, looking at the structure right now, I am still bearish on this market, looking for lower highs and lower lows. Now, with that said, though, what we talked about back here on this drop was that this area around 1.15, this was going to be support. It still is support for the euro, these lows back here, okay? So this down here is support for the euro. Since that time, we have seen some relief from this market. Now, the one thing that we talked about the other day was that if you look at a 15-minute time frame, so going back here, what you can see is that we did have a shift. Okay, so on the 15-minute chart, you can see we had the BOS here above this high, making this the protected low, and we got the close below, giving us an internal change of character. Okay, a 15-minute change of character. Now, the challenge with this, of course, is that markets have been sideways this week with FOMC coming up. Okay, so when you look at this here, okay, and go over, you can see where we did come very close to taking out these highs on Tuesday. However, this high up here, okay, these highs up here did not get taken out on this move. So as of right now, this internal shift over here is still in play, okay, technically. However, at the same time, we have a very sideways euro, and we also have FOMC today. So in my opinion, it is not advisable to go out there and trade these markets, whether it be the euro or gold, indices, whatever it might be, going into FOMC, okay? So largely undecided right now. And you can see that again, very, very sideways action here recently from the euro. And this has been the case even for months just because of everything going on in the Middle East. But once again, if we, just step back here and look at the trend, right now the trend is still lower, okay? Lower highs and lower lows. Even though we are coming off the lows down here around 1.15, we still have the euro making lower highs and lower lows. Okay, so with this in mind and with this recent BOS, it still, in my opinion, makes sense to look for shorts over here. Now, of course, this could change. We could see the market come up here and take out highs like this, in which case we could have a larger bottom in play for the euro. Okay, but as of right now, again, going with what's on the chart, not forecasting what we think might happen, what is on the chart right now is a downtrend. Okay, so we have to go with that. But again, trading ahead of FOMC is always ill-advised. All right, so longer term bearish on the euro. It doesn't mean we can't see more relief here from this market. But again, I am still looking for lower highs and lower lows to develop throughout 2026. Okay, so let's move along to the pound GBPUSD. This should be pretty quick, guys, because really for the last month, this market has been completely sideways. All that's happened here is we've had internal breakup structures and change of characters. So from these lows back here up here to the high, you can see since back here in mid-May, all that's happened here is we've gone sideways, nothing at all in terms of overall structure, okay? And so I maintain that the bigger play here, if you're trading this market, is going to be to wait for a close below this low over here to play a new BOS, okay? But we just haven't had it yet. We haven't had it because this market has been so sideways. And alternatively, of course, if we were to get the market coming up here and taking out these highs, that could look a little more bullish. However, from a structure standpoint, here's what's key. Okay, and this is kind of the really boring part for the pound, is that this high back here is technically following this shift right here. This high up here is technically the one that bulls would have to take out for this market to turn bullish. So the point here is that even if the pound were to come up here and take out this high, then still, technically, you're still within this range, okay? And there's still structurally nothing there to get bullish about, okay? So really just a very sideways market. I don't favor this one nearly as much as the euro. Okay, so moving along here to gold XAUUSD. And by the way, guys, you've probably seen it now, but there are chapters with timestamps in this video because this video is so long. And again, I think we have 11 charts that we're going through today. So feel free to skip around. So looking at gold next. So we talked about this here recently. And the one thing I want to show you guys is that this level right here at 43.36. Now this is going to vary depending on what chart you look at, depending on what feed you look at. But this right here is the 2026 open. And what's interesting for gold is that last week's move, even though we bounced here pretty aggressively from this low, this was the first weekly close below that 2026 open that we've seen all year. Because what you'll notice is that even on the daily time frame, if we come over here, right, this is the 2026 open. And what you'll notice is that back here in March, we actually wicked below, but we never closed below. And then over here, we closed below, okay? So is this significant for gold? In my opinion, it is, because again, we can't just look at this, guys. We can't look at this and say that, well, this is going to be a false break and we're headed toward all-time highs. And that's what you see a lot, right? Like, okay, yeah, we closed below, but this isn't going to hold and we're just going to move higher. But look, you've got to go with what's on the chart, because if you're forecasting this to come up here and take out highs like this and a new all-time high, you're just guessing, right? And guessing is not a viable strategy. You're not going to make money long-term doing that. So we have to go with what's on the chart. We have to respect what is on the chart right now in this moment. And what's on the chart right now in this moment is, again, you see gold holding below this area, really struggling here in this region. Now, obviously, a lot of this is going to depend on the US dollar, what we get from FOMC today. If we see the DXY rally, of course, that is going to put pressure on gold. Okay. In terms of a shift, though, if we look at the 15-minute time frame, we talked about this recently, but really at a minimum, what you'd have to see is gold take out this area around 4,300. Okay. And that's because on this move up, you can see back here, we had, a BOS above this. We had the pullback, a pretty decent pullback here. And so right now, this area down here is still intact, right? This is all just internal sideways action going into FOMC, which again, we expect to see. Okay. So right now, guys, the jury is kind of out, in my opinion, on gold as far as do we break down here and just get the pullback, or there's another case too where you look at here at the 1 hour time frame, right? Notice this inefficiency up here. Okay, this was just a massive move, a very aggressive move from gold, and so far this is completely unmitigated up here around 4,400. So there is also a case where we come up here, take out the highs, and then from here potentially get a pullback. Okay, so just keep that in mind. Again, with FOMC, you've got a lot of volatility coming up here later today. Okay, but again, the fact of the chart is that the market right now is holding below this on both a daily and weekly closing basis. So until we see this week get above here, okay, if this week were to close convincingly above, up here in this area, then yeah, I think we have potentially a larger rally coming for gold. But until that time, you've got to respect the chart and respect the fact that we did have a first weekly close below the 2026 open, last week. So as far as key support levels, if we do see a further rotation lower, you've got obviously the lows back here around 40.90, and then you've got 38.95, which is this pivot from back here in 2025. So that's what I'm looking at for gold. And as for protected highs in terms of structure, if you look at this on the 4 hour time frame, this, in my opinion, is all one price leg from high to low. Okay. So looking at this here as a high, BOS and a protected high, I think is a mistake, just because you look at this price action and all of these retracements were so shallow with regard to this move lower that, in my opinion, this level up here is still the protected high. So in other words, everything between this low and this high up here is just relief. Okay. And there's really nothing structurally to get bullish about. So let's move on to silver here, XAGUSD. And the 5-day time frame, I talked about this one yesterday, but the 5-day time frame is really eye-opening. So you look at this here, this is also the 2026 open. Now this will vary a little bit depending on what feed you look at. It could be 71.33, it could be 71.60, but the bottom line here is that this level on the 5-day is very, very interesting. So we had the close below, right, last week, and notice what we are testing so far this week. Now, again, this doesn't mean that we have to move lower. It doesn't mean that silver has to move lower. The same thing with gold, okay, because this could be a false breakdown, okay? However, at the same time, we have to go with what is on the chart. And what's on the chart right now is that silver is holding below the 2026 open after closing last week below. So same situation for gold. Obviously, the two tend to move together. So if we were to see this market pull back further, then one level we've talked about here, looking at a 12-month time frame, every candle is 12 months, okay? This goes back to 1980, this high right back here. This is the 1980 high. This is a 46-year level. So 48 is really interesting to me. If we do see silver pull back further, we are likely to see a bounce from there if we get there. Okay, I know it sounds pretty drastic, guys, but you've got to consider that even off the high up here, like the high up here was 120 bucks, and we're down here at 70. So the market's already pulled back over 40%. So this idea that we can't go from 70 to 48 after going from 120 to 70, in my opinion, just doesn't make any sense. Okay. So there is still that potential that we get the move back here toward this 46-year level and also, mitigate some of these inefficiencies back here as well. Okay. But really it's going to come down to, like gold, it's going to come down to things like the 5-day time frame. Can silver reclaim levels like this here? Okay. Or do we get a shift, okay, a change of character on something like a 1 hour time frame to get short? And like gold too, I mentioned this yesterday, but really there's nothing here to do, guys. We're going into FOMC, so the market is just completely sideways. There's really no shift here to make me bearish on this market. And again, as long as the market's holding below levels like this here after closing last week below it, then there's nothing to get bullish on either. All right, so let's move along here to oil, WTI here. This is US oil, and this chart is really, really fascinating. I'm going to keep this simple, guys. So you can see back here in March, this is where we had oil go crazy, right? We had that displacement of out of this range, right? Things were very tame back here, or normal, I should say, right? In early 2026, March is when things really got crazy for this market. So we had the displacement out of here. And what's interesting about this right now is that you can see oil is pulling back, right? WTI is pulling back, and you've got the highs up here. Okay, so this is the daily time frame. You can see we've got highs up here all along this level. If you take a parallel level, drag it down, these lows right here touch perfectly off of it. Okay, so is that a coincidence? In my opinion, in my experience, it is not. This is now a parallel channel, right? Markets love symmetry. We talk about that all the time. So now that we are pulling back, the most likely target, okay, near term, in my opinion, is going to be down here at this level. Now, we could see oil rally a bit here because we do have some inefficiencies up here in this area. But the point here is that I think if you're first of all, if you're brave enough to trade oil in 2026, okay, because keep in mind, guys, these candles have been nuts. I mean, it's been crazy. We went from having days of maybe $2 to $3 ranges to having $20 or $30 ranges. So just be really careful with a market like this. But I think if you're looking for a buy, in my opinion, this is the area down here around mid to maybe high 60s to do it, okay? You've got, first of all, the displacement back here, so an inefficiency down here. You've also got the bottom of this channel. Okay, as far as how this works into what's going on in the Middle East with the quote-unquote deal, really the MOU, which hasn't even been signed yet. I'm not a fundamental trader, guys. I trade technicals only, but my gut says that it's not over. I wish it was, but my gut says it's not over. I just think, given what's out there, first of all, it's not even a peace deal. It's not even a signed MOU yet. And even Trump this morning is already talking about, well, if I don't like what I see, I'm going to, bomb them again. So my gut says it's not over, guys, but I am not a fundamental trader. So really, when you're looking at WTI, it's just as simple as this, right? You've got the displacement back here, unmitigated inefficiency. You've got the bottom of this channel giving you a confluence of support. Now, if WTI were to get down here, then what you are looking for, okay, if we go to something like a 1 hour time frame, then what you're looking for here, so you can see back here, really nice stair step pattern down, these lower highs and lower lows. So what you'd be looking for is basically a move, and this goes for any market when you're looking for confirmation, is you're looking for the market to give you those lower highs and lower lows down here, okay? And then you're looking for something like this, where you get a BOS, and then you get the market giving you a change of character. And then you're looking for a higher low to develop. So you have to see that shift right there to confirm that the low is in. But the point here is that when we look at this, okay, basically from down here around 69 down toward about 66, I think that is the area to watch here for WTI, okay? And this is CFDs too on FXCM. Just keep that in mind. The prices could vary a little bit depending on whether you're on a synthetic or you're looking at futures. Okay, so let's move on to indices now, looking at the Nasdaq and also the S&P 500. So what we've talked about recently, I mentioned this in the SMC Outlook video, but in terms of structure here on the 4 hour, you can see where we had the pullback back here. We had a BOS above the high that made this down here an external or protected low. We had the close below, giving us that change of character, okay? So as of right now, in my opinion, the stock market looks vulnerable. I'm not going to say that it is, full on bearish, because of course it's the stock market. We've seen a crazy rally now for months. And look, shorting a market like this, always has a little bit of risk to it, right? Because the market has been so bullish for so long. At the same time though, structure is structure, right? If the structure is telling you that you have a change of character like this and there's potential weakness coming and the risk to reward is, 5R or 8R or 10R or better, then that's worth the risk, at least for me. Okay, I have no problem looking for shorts here if we get it. Now, looking at the 15-minute chart, we talked about this in Discord yesterday, right? And this is the benefit of being in Discord, is that you can see here, we did have a BOS. Okay, so we had the close above this high back here, giving us that break of structure. We then had this as the protected low, and we took that out quite clearly. Okay, now here's the thing going into FOMC, and this is just my opinion. This is never financial advice. But the way that you can now kind of identify where we are likely to go, okay, is now we have this internal shift over here. And what's going to happen now going into FOMC is people see this and they start chasing. In my opinion, that is a mistake, because looking here at this change of character, what you're going to notice here is if we look at discount, premium, and also OTE, which is optimal trade entry, that's the area between the 62 and 79% retracement. This OTE, this dark green area, comes in right here at this 15-minute displacement candle. This is also the same candle that gave us the change of character. So the point here is that if you're looking for shorts, and again, this is just my opinion, I am not advising anybody to short the Nasdaq, but if you are looking for shorts here, in my opinion, this up here is the area to do it, okay? This displacement candle, I would want to see a mitigation of this and then a lower time frame change of character. It could even be something on the 5-minute time frame, preferably following FOMC because you don't want to get in ahead of FOMC. And then from there, guys, we could get a short setup, okay? And really, you've got the context too of this descending channel here. You've got some nice symmetry off of these lows back here. Okay, we've got this 4-hour change of character, and then you've got the highs up here. Okay, so again, this is going to be the area right around like 30,400, maybe 30,500 that I would look for some type of short to develop. Now, of course, if we were to, from these levels, just take out these highs up here following FOMC, then of course we're headed to new all-time highs and there is no short, okay? And then in terms of targets, obviously you've got things like this open gap down here and you've got inefficiencies here as well, along with these lows, okay? So that's just my opinion on this, but so far we do have the 4-hour change of character. We have a 15-minute change of character that occurred at resistance. However, you still have this inefficiency back here, this displacement candle right around 30,400 to 30,500. Okay, so S&P 500 is next, very similar to the Nasdaq, obviously because the two do tend to move together. So here on the 4-hour time frame, we have a change of character. So you can see here, similar situation where we had the pullback back here. We had the BOS, okay, gave us a BOS, protected low, we had change of character. Now, this right here, again, signals weakness for this market and a potential lower high developing, which over the weekend, obviously, we got a gap on Monday with the markets rallying on the quote unquote deal, which again, is not even a peace deal. It's not even an MOU yet. It hasn't even been signed yet. And the market is already acting like everything is behind us. But that aside, guys, we have the market, giving us potentially some weakness here from this high as well. So very similar to the Nasdaq, you can see the symmetry here off of the lows. Okay, so as long as this down here is in play, which it is, as long as this high is intact, then we have the potential for a lower high to develop. Now, what's going to be key though for the S&P 500, and this is where the Nasdaq is a little bit ahead, is going to be things like the 15-minute chart, because really, when you look at this price action. Whereas the Nasdaq gave us a new high back here to give us a BOS, and then we can use this low. The S&P 500 has not given us that same structure. So back here, you can see that we have a BOS here and this low. So really, in my opinion, 75.15, this is going to be the level to watch. Okay, if we take this out, then I'm looking for shorts on a lower high. Okay, and then of course, like the Nasdaq too, we have, if we go back here to the 4-hour time frame, we've got this open gap down here. So from the weekend around 74.35, and then of course inefficiencies like this back here and the lows. Okay, so again, guys, in my opinion, even though this market has been very, very bullish over the last few months, we do still have this change of character in play and the potential for a lower high to develop. Okay, and alternatively, if I am wrong on this, and we just come up here following FOMC and take out the highs and take out this high, then of course there's no short here, and that's off the table. Okay, so waiting for confirmation is going to be key. And the same thing for the Nasdaq too. Even though we have that 15-minute change of character, like I said, I would want to see following FOMC, something up here and give a new confirmation up here in this area following that mitigation. If we get that, it could be really interesting here for these markets. Okay, so let's wrap up now with crypto. So last but not least is going to be Bitcoin. Now, I want to start this out actually talking about Tether Dominance because I mentioned this recently in a video. And I told you guys that if you were looking for a crypto short, just my opinion, never financial advice, but to watch this level on 8.209%. And for those who don't know, Tether Dominance or USDT.D, okay, this moves inversely to the crypto market because it shows you the dominance level of Tether. So looking at Tether Dominance, this level down here was on my radar. Now, why was it on my radar? Because if you go to a weekly time frame, two things. First of all, you'll notice how we got this high up here. Okay, obviously rejecting from these highs back here in 2022. Now, the reason though that this level at 8.209 was on my radar is if you look back here on the weekly chart, we have several highs and closing prices here in 2023. So never closed above it back here. Okay, let's move over to this area. You'll notice once again, resistance here. Okay, never closed above it on the weekly here. Now, recently we closed above, okay? Got the weekly close above. So therefore, right, really simple, this was going to be my support level to watch. And sure enough, what you can see here is if we go to a 4-hour time frame, you'll notice that this level was swept, but we essentially bounced from here. Okay, we reclaimed it and then we got a higher low. Okay, so the way this translates into BTC is notice this right here. If we go over to BTC, look at the same 4-hour time frame, you'll note that it's basically the inverse of it. Okay. Now, also, if you guys do want a place to trade crypto, check out Bybit. It's in the description below. You can get up to $30,000 in bonuses when you deposit using my link. So check that out. They're kind of the OG in terms of crypto and especially their mobile platform, which is really, really incredible. Okay, so for Bitcoin, guys, right now we do have the market losing this key level. Okay, so I've mentioned this before, but if we go to a weekly time frame, what you'll notice about BTC here is that on the weekly, this area right around 65,700, you've got all of these lows back here and closing prices. Okay, so this was months of price action back here. And what you'll notice is that we closed below. Now, despite the fact that last week tried, okay, and we did rally off the lows, last week did not close back above. In fact, it closed right at the level. Okay, so if Bitcoin had closed up here, then I would probably be saying something different in this video. But because we closed right here at the level, we didn't technically reclaim this following the close below, okay? And so for that reason, all of this that I've talked about over the past really, week was still in play. And what I told members too in Discord yesterday, again, this is the benefit of being in Discord, is I said, as Tuesday's candle was forming, we weren't even closing below here yet, but I told members that if we close below here on Tuesday, okay, that could mark a local top. And sure enough, we saw BTC, from this area, sell off quite a bit, okay, toward the low. Now, obviously, we are bouncing here. And I also just told Discord members as well that we were likely to get a bounce from this area just because you can see where BTC is coming back here to test some of these highs. Now, going into FOMC, I do think that there's a good chance we see a retest of this area. We could even sweep some of these highs just because it's FOMC, it's crypto. We know how volatile things can get. But I think longer term, though, for me at least, I am still looking at and targeting this area around 44K. Now that sounds extreme, okay, but there's a reason for it. So first of all, on the weekly time frame, you can see we have the bearish change of character. This is still in play. We also have obviously the market closing below this area around 65,700. And then also too, looking back here at 2024. So this displacement back here, what you'll notice is that we have this displacement, okay, out of this range. And we came back and tested part of this. However, there is still a large fair value gap down here in this area, okay, right around mid 40K. Now, furthermore too, if you look at this price action, let's go to a daily time frame and you look at the price action here. We have two bear flags that formed, okay? So this one right here, if you treat this as a flagpole and this right here as the flag, then this high up here, so basically what you do is you take the height of this move right here, this dotted line, and then you take that same distance and measure from this high up here. And when you do that, you get an area right there around 44K, which is that inefficiency from 2024. So could it be a coincidence? Of course, right? But this is still my target. Now I'm also still short here from just above 80K. I have not taken any of this off here. I'm short from up here in this area. I mentioned this in Discord in real time. So when BTC was up here, I mentioned my short position. This is a 13R trade, meaning that my reward is 13 times my risk. Okay, so it stands to make me a lot of money if it does play out. Again, I haven't taken anything off here because there's been no reason to. I mean, you look at this on the 4-hour time frame, and look, there are people getting bullish on crypto right now. But look, from a structure standpoint, okay, you look at this right here. This entire move down from these highs up here, down here to the low, all of this was one price leg. So everything from this low to this high so far is just relief. There's nothing here indicating a shift in the structure for Bitcoin, okay, period. So even though we could see a further rally, it does not mean that we have a structure shift because this is all just relief within this downtrend. Okay, so I am still bearish here on BTC, and I think that losing this level on Tuesday could be significant. But again, as always, it's going to depend on what we get from FOMC because really, I mean, FOMC can produce so much volatility and it's also crypto. You never know with crypto. If we were to just close back above here, then this is still support and we're still at an indecision point, okay? But again, longer term, I am still targeting that mid 40K area. And the way this looks on Tether Dominance, if we head back over here to USDT.D, the way this looks here is the market is bouncing from here and giving higher highs and higher lows. However, we also have these lows back here. So if I map this out, what I would anticipate from this market is if we were to see Tether Dominance come up here into this area. You've got these lows back here, and then you've also got the top of this channel here, okay? So if we see Tether Dominance move up here over the coming days, then this is likely to be resistance or support for Bitcoin, and then we probably see a pullback from there. Now, if we see the market though, break back above these lows and also get back above the top of this channel, then of course we could have the market heading back here toward the highs, which means Bitcoin heading back toward the lows. Remember, this moves inversely to the crypto market. Okay, so I am still bearish on Bitcoin. Like I said though, where we closed today and really the week with regard to this area around 65,700 is going to matter. Okay, so let's take a look here at Ethereum to wrap up. So very similar to Bitcoin, you can see where we are getting the market moving within this ascending channel off of the lows. So a very corrective stance. Now, like Bitcoin too, you look at the highs back here, down here to the low, this is all one price leg. So look, anybody getting bullish on the crypto market, in my opinion right now, is very premature. There's nothing here structurally to tell me that there has been a change of character down here. Just because, again, all of this was one price leg. If we had done this right here, okay, and then we closed above, then that would be different. But again, all of this is one price leg. Therefore, everything between this low and this high is just internal. Now, I do want to show you guys something too before we wrap up with this video, which has been, I know, a very long video, but a lot to talk about here before FOMC. So looking at the weekly time frame, you can see where this low back here, I want to actually play this forward here because this is important. So this is on a linear chart as well. This is why you see price kind of scrunched together back here within these bull markets. But really, when you look at this here, okay, you've got this low right back here, okay? You've got these closing prices on the weekly, and then you have this low. So playing this forward now, and I want to show you this too, playing it forward because it does matter in the moment. So back here, this is how I would have drawn this trend line. Like if I saw this here, I would draw it this way. And what you'll notice is that over the coming weeks, over the last few weeks, we have seen Ethereum now actually close below this level. Now, what you'll notice is that we actually retested it so far this week as well. So this, in my opinion, is significant. And this retest right here in rejection is exactly how you confirm levels like this. Like the price action right now is telling you that this level is significant. Whether the market stays below here or not, obviously is yet to be seen. We don't know what's going to happen. This doesn't tell us what will happen in the future, but it does tell us that this level is significant and the market participants are paying attention. So therefore, we should also pay attention, right? It makes sense. So I've maintained for a long time, guys. If you've been on X and you've seen my posts, I've maintained since all of these highs back here that we were eventually coming back to $1,000, possibly even lower. And this right here could be the technical catalyst for that, okay? Because typically when you get a break like this, like if this holds up, so in other words, if this area around, let's say 1850 holds up, then looking at this here, you've got the trend line off this inception low, you've got these closing prices, you've got this low here. If this holds up, then the target obviously would be lows like this down here and lows like this one, which is at $1,000, even just below that. So I maintain that that is where we're going, just simply because of the structure here on this weekly time frame. I know it's only one trend line, guys, but this isn't just about one trend line because we look at Bitcoin, everything I just explained to you there. We look at Tether Dominance, everything I explained to you there, going all the way out to the weekly time frame. There are multiple factors here, right? Whether this comes to fruition or not, we don't know, right? I'm not here to forecast, but I'm here to tell you that this right now is significant. And so far, what you can also see here too is that recently we did take out this low back here, okay? So we did actually close below here. So in terms of a bottom, people talking about a crypto bottom, there is absolutely nothing here on these charts to make me think that a bottom is in. Okay, nothing. There is nothing structurally here to make me think a bottom is in for crypto. In fact, just the opposite. We are starting to break down now once again. Obviously, if markets like Ethereum were to get back above here on those higher time frames, the same thing with BTC and also Tether Dominance. If we were to see Tether Dominance close a week back below levels like 8.2, then that could absolutely change things, okay? But until that time, like I said at the beginning of this video, you've got to go with what is on the chart right now, not what you think will happen. And what is on the chart right now is this, okay, for Tether Dominance and Bitcoin holding below this level here on a weekly closing basis, okay? And also Ethereum holding below trend lines like this on a weekly closing basis, okay? So again, it could change, but what is on the chart right now is showing us a bearish stance for the crypto market. So I truly hope this video has helped. Check out the video right here, which is that free SMC training. That is going to show you exactly how I trade SMC full time. This works for forex, commodities, indices, crypto, whatever you're trading, as long as it's liquid enough, this strategy will work. So until next time, trade well, be careful with today's FOMC, and I will talk to you again tomorrow.